Hello, good evening, welcome. It's a full house. It's great to see all of you here. At LBS, we always start on time. My name is Sergei Guriev. I'm a Dean of London Business School, and I will not take much of your time because, of course, you're here to hear from our tonight's guest, Nicolai Tangen, who is managing the largest sovereign wealth fund in this world, Norges Bank's investment management. This is the fund which has something like 1.5 percentage point of all listed equity in this world. So today, or you may say starting last Friday, but actually starting many years ago, this fund has been invested in companies which go up and down, right? And especially in today's environment where the fund is investing in companies which are affected by many interesting developments, especially those in recent weeks. We, of course, would like to hear from Nicolai how the fund, how he, as the CEO of the fund, thinks about investing in those challenging times. Now, Nicolai also has his own podcast, which I'm sure all of you have listened to, where he shares wisdom, but also asks CEOs of global companies that the fund is invested in. He also is very open sharing his advice in op-eds. The recent op-ed in Financial Times, for example, was talking about the importance of short-term reporting and the importance of long-term thinking. So there are many things that I'm sure we will have a chance to talk about today. This is, I should say, part of Summit series of our Institute for Entrepreneurship and Private Capital, where we bring in outstanding speakers to talk about the most challenging decisions and issues in their distinguished careers. And with that, I would like to invite the director of the Institute, Professor Florin Vasvari, to the stage, and Nicolai, and they will have a fireside chat with you. Please.
Thank you. Hopefully you can hear me. Yes, it's working. Very good. Excellent.
How many Norwegians do we have here today? Hands up.
Wow.
Okay, that's good.
There you go. Excellent. Excellent. So thank you all for coming on time and for taking pictures. It's allowed to take pictures, so feel free to do so. We will make sure we smile. So we appreciate you coming on time, and we appreciate so many of you coming. This is quite unusual for us. We typically run these events in a much, with a much smaller audience, but Nicolai is so popular. I'm almost learning now that the number of speakers is a function of the assets under management, or maybe there's some causal effect here somehow. So thank you for coming. So today's session is really about understanding the largest fund in the world. As Sergei was saying, the fund, the Norges Bank investment management is the management arm of the Norwegian central bank that manages the fund, is the government pension plan, actually. The fund is now $1.8 trillion, the last time I checked at least, and has been set up in 1996. And since 1996, it has done incredibly well, compounded returns at about 6.30% or something like that. Nicolai has been appointed to run this fund 5 years ago in September 2020. So maybe we can start by, Nicolai, maybe you can tell us a little bit about the fund, maybe the governance structure so that we all understand it here. I did some research myself, and I can definitely say that amongst all the sovereign wealth funds, your fund is the most transparent by far, okay? It's really transparent. Everything is on the website. But maybe you can tell us a little bit about the fund in terms of numbers today, and maybe how you found it 5 years ago when you joined.
Sure. I think to understand the fund, you need to go all the way back to 1969, where they were drilling for oil outside the coast of Norway. And on the very last well, they found oil. If it hadn't found oil then, they would have packed up the toys and gone home. And this was announced to the Norwegian people the day before Christmas Eve, 1969. And then you can say, wow, what a Christmas gift. But the thing was that in many countries, it had been a curse to find such wealth. It had led to corruption, to crowding out of industries and so on. And so that's when the Norwegian politicians decided to make it into a fund. So in 96, they made the first deposit into the fund, 2 billion Norwegian kroner, and that's grown to roughly 20,000 billion now. So the idea was to take the wealth from the shelf, move it into financial assets. And now we made twice as much in terms of returns in financial markets compared to the money we put into the fund. So in a way, we found oil twice on the shelf in financial markets. We are 700 people around the world, so it's a very, very small team, okay? So I call us the national money-making team. I kind of think it's a big honor to work in that firm, because what we do is to take care of the money, and the money now provides 1 out of 5 hospital, school, road. More than 20% of the budget is financed by this fund. The way it's run according to a mandate that we are given from the Ministry of Finance. So the ministry is very, very important. And they have made this mandate, and we are pretty close. We're investing close to that mandate. So it's a relatively index-near fund. And I think you have to be pretty index-near when you are of such importance to the country. What else?
Okay, and definitely this is not just an index fund. You do have, you augment this with some selective active management.
Yeah.
We can talk about that as well. So
just a couple more things. You mentioned that it's a very transparent fund. It's the most transparent fund in the world, okay?
Yeah.
Now, how can I say that? Well, there is actually a world championship in transparency. Historically, it was won by the Canadians. And I kind of think it's okay to be beaten by Canadians in ice hockey, but it's not okay to be beaten in transparency. So we decided we're going to win this, and we worked really hard. And last year, we got 100 out of 100 in all categories. So we are super transparent, okay? Everything you want to find, you can see on our website. I think that's really important to be transparent. The second thing is, what you do needs to have broad political anchoring. So everything we do is anchored in the parliament. That's also very important, because then the politicians don't change their mind, and you haven't got a change in policy when you have a change of parliament. So those are two very important things.
And maybe so we can dig a little bit into your activities. So you joined 5 years ago, the fund. Based on my research, the fund went up 80% since you joined. Maybe I got the numbers wrong, but since 2020 until today, the fund went up by about 80%.
Yeah, but I mean, that's not me, right?
No,
that's
just...
that's financial markets.
Absolutely.
Financial markets have been very strong, very strong.
And of course, you have a set mandate by the Ministry of Finance, and you are overseen by the board within the central bank.
Yeah.
But to what extent did you manage to bring in your own investment style within this mandate? So obviously, your role is to operationalize that mandate and implement it. To what extent do you have some degree of freedom to work within that mandate to generate this type of value?
Yeah. No, we of course do that. So we are working on, in a more systematic manner, to learn from our mistakes. That's one thing. So we've created something called an investment simulator. So, for instance, now you want to buy $10 million of Apple. Well, before you manage to put the order in, you basically get back to you know, Florin, you're not very good in technology because you never made money in a technology stock before. It's a consensus trade. You are best at contrarian trades. Your target ticket size is $100 million on $10 million, and so on. So you get all your trade history back to you in a systematic manner, so that you can more easily learn from your mistakes. Now, after having implemented that, we see that our portfolio managers are better at running the winners for longer, and they're cutting the losers quicker. So it's actually impacting their trading behavior. So that's one of the things we did. We've improved information within the fund, both internally and externally, and so now we now have, just a level of applications which we have never seen before. which has meant that we have been, just, I think, improving pretty much everything we do. There is more a focus on technology. We are a very important technology company, and we can come back to just how we are applying AI. And so I think we've just been kind of fine-tuning just a lot of things. We are working on people's psyche in a different way. So we use sports psychologists in the fund. Now, why do we use sports psychologists?
Yeah.
Well, the thing is that if I say, listen, you need to work with a psychologist, then you are ill. If I tell you you have to work with a sports psychologist, then you are a hero.
I got it.
Okay? Even though you talk about exactly the same things. And the reason why sport is so good is because in sport they focus in on process rather than outcome. You know, before a race, you don't think, gee, I really have to win this race.
Yeah.
You think about, I just need
what do I need to do?
Just need to optimize every part of the process. And then the results are basically a function of your process. It takes away a lot of the stress. And it means that you can come through tough periods in a much more resilient and better way.
So I guess you are more introspective in terms of figuring out what works, what doesn't work, and do you have an element of, let's say, experimentation when it comes to these approaches to, for instance, avoid human biases, like the one that you mentioned earlier?
Yeah, so we work
holding longer, selling faster.
Yeah, we work on all these things.
You work on all those stuff. Okay. Yeah. And do you...
And I'm sorry, two more things. We try to increase the time horizon for our investments. The thing is that the more long-term you are, the fewer decisions you need to make, and the fewer decisions you make, the better they tend to be. If you have to make 100 decisions a day,
of course,
they are not going to be very good.
Yeah.
If you make one a month, it's better.
It's going to be good. Yeah, much better, for sure.
Much better. The second thing is to work on the ability to be contrarian. Now, if you have a square and you have right, wrong, consensus, contrarian, where is all the money?
Well, I guess following the average, following the crowds, right? Consensus.
That's where the money is not.
No, I'm just saying what people do.
That's what they do.
That's what people do. Because money would be on the contrarian side,
absolutely.
For sure.
So if you follow what everybody else is doing, you're never going to lose your job, You can just load up on the most expensive stocks and the most bought and hyped stocks. You're never going to lose your job.
Yeah, indeed.
You can lose a lot of money. As long as everybody else is losing money, you're fine. So to be in the contrarian square, to be right, contrarian, it's a very tough place to be, but that's where all the money is.
Yeah.
Now,
it's a very fine difference between being contrarian and right and contrarian and wrong, as you know.
Very much.
Contrarian and wrong, you get fired.
Absolutely. Absolutely. Now, so the thing is that in finance, life is not a popularity contest. Yeah. Now, my wife says only people without friends say that. But I truly believe if you are very concerned about having friends and people liking you, finance is not for you.
Yeah. Agree, yeah. There's a lot of fear of missing out there, yeah.
Yeah.
And, okay, very good. So let me just maybe dig a little deeper into how you generate your returns. So I know that your mandate is to follow a particular benchmark, which is FTSE All Cap Index, about 8,900 stocks, and then an index of bonds, about 18,000 bonds out there. Your portfolio is, for those of you that are not familiar, about 71% equities, public equities, 27% fixed income, and the rest is in real estate, unlisted, and infrastructure. So how do you generate alpha here relative to your benchmark? I did my research. Seems like you are generating alpha relative to your benchmark. So you're generating about 25 basis points, which might not seem like a lot, but given the capital that you have, that's gigantic, especially that you compounded over time. So how do we think about generating alpha in such a large, enormous fund?
Yeah.
Keeping in mind that we also need to worry about transaction costs, right?
Yeah.
I mean, they could add up significantly.
Absolutely. Well, we have a decentralized structure. Mm-hmm. So we have sector specialists and team working in the various sectors, financial team, consumer team, tech team, so both hardware and software.
And they have autonomy in picking the stocks they want.
They have autonomy.
Full autonomy.
Absolutely. So they have, like a benchmark, and then they are supposed to beat the benchmark. And so this is all very decentralized. Then we also have 5% of the fund is run by external managers. That's mainly in emerging markets. Roughly a third is, or just under 30% is from bonds. So there again, it's decentralized to the various regions. And then we have real assets where we own just under 1,000 properties around the world. So for instance, here in London, we own 25% of Regent Street.
Yeah. And you recently bought something in Mayfair as well, right? In January, I've seen the news.
Yeah.
Okay, so how do you ensure that these teams, what you just told us is that they work in their areas, let's call them silos maybe, but how do they...
They were silos in the past, but we worked very hard to get rid of the silos.
Okay. So how did you manage that with the system that you created, or how did you break these silos?
You break silos by talking about it, by being conscious about it, by having cooperation projects across, by improving communication across. You work on it very, very hard. I think it's really interesting because our human nature is to not share much information, is to work in silos, is to be pretty short term. That's how we are as human beings, And then the job of a CEO is basically to stretch the time horizon, make sure that people communicate more, share more, all these kind of things. That's what we do every day,
Yeah. I mean, even though you track so many stocks, close to 9,000 stocks, you are not really a passive holder of those stocks. You are actually involved in governance issues, you vote in meetings, and
absolutely. I would say we have active coverage of 800 companies.
Okay.
And then the rest would be more passive. It's really, really important to be to have active asset management because we are also an active owner. Okay, we are not an activist owner, but we are an active owner. It means that we communicate with companies. We have some 3,000 company meetings every year. And we vote, really important. We vote at more than 100,000 resolutions at nearly 10,000 AGMs. And what is interesting, I think, is that we own 1.5% of all the equities in the world, but we pre-announce our voting intentions 5 days ahead of AGMs so that everybody else can see how we're going to vote. And that means that when we have against votes, roughly 3 percentage points more would look at what we do. So we have impact on just under 5% of all the votes in the world.
So you're influencing also other shareholders who are probably not doing their homework.
Well, they can see what we do, right?
Yeah. And I guess when it comes to these governance issues, is there an element of learning? Because obviously you have this very successful podcast and you are interviewing a lot of very successful CEOs, and the fund is investing in those companies that are run by those CEOs. What leadership styles have you seen when talking to these CEOs, and what is your perception of your understanding of those individuals, those very successful individuals and their styles, and how is that discussion maybe shaping maybe your allocation or maybe not?
Yeah, so I would not say it's shaping allocations, but what is happening to leadership styles around the world? I think it's interesting. I think there is a trend towards a more kind of democratic way of running a company. So more anchoring, broader consensus, and flatter structures. That's something which is being kind of accelerated by social media and so on, I think. So this is in a way...
And digitalization probably, yeah?
Yeah, this is in a way a bit of the Scandinavian leadership model. So I think that's moving up. And then I think the Indian leadership style is moving up. And it kind of started with the tech companies in Silicon Valley, I mean, like Satya Nadella and some of the other people there.
Google, yeah.
Very impressive. And I was in India the week before last and met with just under 40 CEOs. And we were talking about the Indian leadership style. And I think there is a level of humbleness coming out of that. India, even the gods are supposed to be humble, right? Mm-hmm. And so they are very humble. And they are working for something which is bigger than themselves. There is a lot of empathy. there is, you know, they don't like to lay off people. They like to treat people really well. And so there is something there which is, I think it's moving up, the whole kind of empathetic edge. It's very interesting.
And do you see that this leadership style is potentially leading to better performance long term in the case of those companies? I mean, because sometimes, let's say, not firing people during a difficult period might seem like a very bad short-term decision, but it might help those companies long term. Like we had the recent experiment with COVID, where companies fired very quickly a lot of people, and then right after COVID, they struggled to come back. They, in fact, never came back because they fired critical people.
Absolutely. Yeah. No, I think generally, the better you treat your people, the better the results will be, you know, to a limit.
And is this an element that you look at when you analyze those 800 stocks? Is this part of your analysis?
Yes, we do spend time on management quality and so on. I think it's interesting. When I was younger, I probably spent less time looking at leadership styles and less time looking at corporate culture. Corporate culture is just unbelievably interesting. And you see two companies which can be pretty much exactly the same, and then one company is doing really well and one is doing really badly, right? You see it to the extreme in banks. I mean, banks, they're basically the same.
Yeah.
Then some of them are going bust and some of them are hugely successful, you know, for tens and tens of years. And it's just like, it's the type of people you hire, is how you train them, is how you think about succession. You know, it's the values, it's doing the right things. But you see it in industry after industry. You see it in everything from, you know, to footwear companies may look the same, to elevator companies may look the same, to defense companies may look the same, and then some are successful and some are not. And I think it's to understand the corporate culture, and we spend a lot of time on that on the podcast.
Yeah, yeah. And to what extent do you think these leadership styles and their success correlate with the compensation at the executive level? To what extent do you think maybe the compensation packages that people at that level get are not optimal enough? Is this something you look at, or?
Yes, we look at that.
Yeah.
What is important for us, it's not so much the level of compensation, but it's the structure. It should be long-term, it should be equity-based, it should vest over a period of time, and it should be dependent on results, you know?
Yeah.
Yeah.
Okay, so maybe we can switch a little bit on, related to performance, when the markets are very volatile, you know, the returns can fluctuate quite a bit. In 2022, you had a significant loss. You reported a significant loss, which obviously brings with it some costs, maybe on the political side. But then 23 and 2024 were very successful. You had excellent returns. I just read an article on Reuters that last year your profit was over 220 billion. Now, the question that I wanted to ask you, especially in the context of today, is what happens when the performance is not so good? You know, how do you deal with that situation, with the pressure that you might have as a long-term investor from, you know, maybe people in the political spectrum or people that are outside that, you know, the citizens of Norway, right, that are maybe questioning what the fund is doing. They might not see the long-term perspective that you take. How do you deal with that and stay the course?
Well, I think the really important thing is to be very transparent about everything you do. So when we report results, it shouldn't come as a surprise. And then is to have that mandate. And with the mandate, we also have a risk budget. And the risk budget is measured in what is called tracking error. And it is a measure for how far away from the index you can be. And I think that's really important because if...
and that's 1.25%, right? Is it something like that?
Yeah, so it means that in 2 out of 3 years, you should not be further away than 1.22%, 25%. Now, why is that important? Well, it's important because if we had suddenly lost a lot of money, I would have been sacked at the exact wrong time. I would have been sacked when the results were really weak. There is another person coming in, liquidating all the positions at the worst possible time. So that's why that's important.
Actually, in 2022, even though you underperformed, you did beat your benchmark, just to clarify. But
yeah, and then 23, 24, we didn't.
Yeah.
Yeah.
And transparency, you think, helps a lot? I mean, people understand the messaging that you provide.
Transparency is important and expectation management is important.
Yeah.
You know, I think we've been saying for some time, I think returns will be very low going forward if, you know, could be easily be negative. Because we've had a period of uninterrupted growth. We've had very strong development in financial markets. We have had low interest rates, and we've had, you know, a good geopolitical situation.
Yeah. So there is a lot of lack of information, I would say, associated with all the other sovereign wealth funds. I tried to figure out, you know, to do some comparison. I actually did struggle a lot to find anything, other than that they invest in other asset classes as well. But what I find fascinating as an academic is the governance structure that you have on top of a sovereign wealth fund. You know your peers out there, and obviously a lot of them are state backed. The second is CIC in China, and then you have ADIA in Abu Dhabi, kind of the third. What do you think it would be an ideal governance structure? Is it the one that you have? Could the one that you have be improved? Or is there another structure that would be more appropriate for a sovereign wealth fund if you had a blank canvas and you were to redo this again? Any thoughts on that?
No, I think given where we are in the world, in a democratic society, a very open society, it's a good structure we have. It's the fund is owned by the Norwegian people. It's kind of taken care of by the parliament. The Minister of Finance is kind of running it. They have given the mandate to the central bank, and then we are situated inside the central bank. It's a good structure.
Okay. So in addition to the governance, you obviously have a lot of operational issues. You mentioned that you have about 700 employees or so, and you invest in, you know, 1.8 trillion worth of assets. So there are lots of stocks that one needs to pick, you know, close to 9,000. How do you employ technology to make this more efficient? I mean, you mentioned just that you cover mainly 800, but still 800 is a lot of stocks.
Absolutely. And when the index changes, we also have to make transactions, right? So we have something like 35 million transactions a year. I mean, it's a huge machine.
Wow.
And we are doing it more cost efficiently than any index fund in the world. So there's just a lot of technology going into this.
And so how exactly, can you tell us a little bit more detail about this technology that you use? Is it something unique to your fund, or is it something that you have taken from other fund managers out there in the public market?
No, we have built it up ourselves over the years. We have everything in the cloud, highly automated. Nearly everything we do is you know, straight through processing. So huge amount of technology. We are one of the more important technology companies in the country.
Yeah. I've seen that one of the main departments that you have internally is at operations and tech department, which is very important, and probably you're hiring people in that area as well.
It's really interesting. So over the last, if you look at our last 3 months, 40% of everybody in the fund have contributed code to our central code bank. So nearly half the firm can program.
Wow. Okay, that's very
it's incredible, and now with AI, it's phenomenal. I mean, we were early in being very, very serious about AI, and how do you get AI into an organization? Well, first of all, you have to, at the top, just relentlessly bang on about it, right? Every time I get the microphone, I'm just banging on about it. All the people you recruit, they need to be able to program. So then all the summer interns had programming activities. We have, you know, AI ambassadors. We have more than 20 people across the firm, which has got weekly contact with Anthropics, which has Claude. And then we have all types of serious mandatory training and so on. So it's just absolutely incredible what's going on now. So I asked everybody in the firm in December, how much have you improved your efficiency this year? On average, 15%.
15 or 5?
15, 1.5.
Wow.
You know, that's across the board. It's really, really impressive.
What are successful uses of AI in your setting? Is it
Well, so the thing is that we use it. I was just walking around. We have 140 people here in London. I walked around today to see what people were up to. Everybody has Claude on one of the screens. They are working on it continuously for all kinds of things. But we, for instance, in trading, we are using it to reduce trading costs.
Yeah.
The models can tell us, for instance, we can sell something on a Monday and buy it on a Friday because of index changes. And so these models help us reduce trading by internalizing more of the
splitting the trades and maybe
absolutely,
timing them.
helping us deploy capital around month end. There's just like an endless amount of activities we can use it for.
And you prefer to have this type of technology internally as opposed to outsource it? Because some fund managers like to outsource this type of solutions.
Yeah, we have it internally.
You have everything internally, okay. And other than the technology and the AI uses, I mean, obviously the value comes from the people, right? The talent that you have internally. And maybe you can tell us a little bit about, first, how you attract talent, how you keep the talent and develop the talent, and finally, how you think about succession planning.
Yeah.
Because
okay, so I mean the way we work with people. This is my favorite topic. Okay, so just
let's dig deep then.
Absolutely. Now, how do you attract people? Well, first you have to talk about the mission, and we talk a lot about the mission and the importance of the fund for the Norwegian people and for society, right? We are out at universities. We talk to students. We have the podcast, which has helped us improve application numbers very significantly. And then we send out the real specialists. So when I joined 4 years ago, I accounted for 60% of all the external presentations. Last year, just over 10%. When I joined, there were 4 people who spoke on behalf of the fund. Last year, 150 people spoke on behalf of the fund.
Is this one of the KPIs that you set internally?
It's very, very important because you want to learn from the real specialists. And if you can put out the real specialists there, you get just better applications. And we got amazing women working in the fund. When I joined, there were 27% women. Now we are 35% women. So we just get much better applications across the board. Now, how do you keep people? You make sure there is mobility. You make sure that you move people around. You make sure that you try to give them really interesting things to do. You try to see them and acknowledge them more. And I think that's,
And getting them intrinsically motivated to do their job is challenging these days.
Well, you have extrinsic motivation, which is money. That only gets you so far. But I think it's the intrinsic motivation and
that
the pride
that's
really, really important.
Yeah. And you actually have, I noticed.
And then you know what? I think
you have a very diverse group from 37 countries. I mean, this is a very international organization.
But the thing is, there is nothing more fun than investing. It's the most fun thing you can do. Why is it so much fun? Because everything you eat and drive and wear is made by companies. You need to understand technology change. You need to understand consumer preference. You need to understand, what's going on with the products. You need to understand corporate culture. You need to understand greed and fear, geopolitics, defense budgets, all these kind of things, macroeconomics, politics. And it's not like it's changing once every month. It's changing like 1,000 times every second. And so there is nothing more interesting you can do.
Yeah.
I mean, when I wake up in the morning, it's just like, I just spin out of bed. I just have to read what's going on, what's been happening overnight. I mean, it's just so exciting. And the thing is that it has never been more exciting than now. Because everything is changing so fast. And things which wasn't true, a month ago is true today. It's unbelievable. And on top of that, technology is changing so unbelievably fast. I mean, you guys may watch the Olympics, okay? So you have the Olympics, from one Olympics in Paris to the next Olympics. Human race, improving speed by what? 1%, 2%? Okay, next Olympics, another 2%? Next Olympics, 2%, okay? So perhaps a human being can run 5% faster during 3 Olympics. technology, AI, 10 times more chips, 10 times more efficient, 10 times better software. That's a 1,000 increase in complexity between 2 Olympics. Next Olympics, another 1,000 times. What's 1,000 times 1,000?
A lot of
How much?
thousands. A million.
It's a million. He's a professor. Good.
You put me on the
Okay,
spot.
next
Usually I put the
next-
students on the spot.
Okay, now stay concentrated. Next Olympics, 1 million times 1,000.
A billion.
A billion. There you see. So a billion times increase in complexity, you know, while the human race is just standing still. I mean, is that interesting or not? And you are living through these times. You know, nobody has lived through these times before. It's unbelievable.
So how can the human mind deal with this complexity? We are wired to simplify things, to have shortcuts. I mean, I can see when my students submit assignments, they all follow shortcuts, you know? How do we manage this complexity with a limited brain?
Okay, you manage complexity by trying to stay agile and by loving change.
Yeah.
We need to love change and we need to be amazed by what's going on. How can you best position yourself to cope with change? Learn a lot of different things. You know, when you got out of London Business School, you have narrowed down in a way on business, so that's not so good. So you need to broaden out again. You know, you need to learn about social psychology, you need to learn about anthropology, you need to learn about all these kind of different things. You need to read books, you know, really wide. You need to read the Russian classics, right? You need to have many different types of friends. People with more different types of friends are more innovative and they come up with better ideas. So you need to so all of you, before you leave today, you need to shake hands with 2 people you never met before. You need to just improve the network of people you talk to, because that helps you absorb new information and helps you better navigate the change we see in the world.
Yeah, you need to have range, right? You need to cross-pollinate ideas from other fields.
Totally.
An investment is indeed a multidisciplinary activity. You mentioned psychology at the beginning, and it's getting more complicated, right, to stay ahead of the game.
Yeah, and then you need to be confidently humble. You need to be humble about all the kind of things you don't know.
That's the great thing about the market, always keeps you humble.
Yeah, absolutely. I mean, the market has got one job, and that's to try to steal your money every day, and it's doing pretty well.
Yeah. I'm mindful of the time. I want to open it for Q&A from the audience, but I want to ask you one last question. We have a lot of young people in the room here trying to pursue a career probably in investments. That's why maybe you are here. And I was wondering, if you put yourself in your 20s now, the person that you are in your 20s, what advice would you give to yourself when you were 20, or to our students over here?
Yeah, I mean, the most important
What would you do differently?
The most important thing is just never listen to your parents, right? I mean, never listen to your parents.
My son is over there.
Yeah, don't listen to him. I mean, he can hardly calculate.
I'm struggling under pressure.
So, no, you have to do what you love. You know, you have to follow your passion. If you don't follow your passion, life is going to be miserable. You're not going to have any fun, and you're not going to be very good at it, because you need to love what you do. So I asked Jensen Huang, you know, NVIDIA.
Yeah.
So I said, Jensen, how much do you work? So, well, you know what? I wake up at 5 in the morning. I work the whole day until I go to bed. I work every day. I work every Saturday, every Sunday, every holiday. I said, wow. But when do you relax? Yeah, but Nicolai, I relax all the time because I love what I do. And so you need to love what you do. So you need to do what you have a passion for. Then you need to, it doesn't matter how much money you make in your first job or second job. It's all about the learning. You need to find somebody across the table who you think will really teach you and care about your learning. Okay, very important. I was really poor until very late in life because I had made nearly no money in my first few jobs. Doesn't matter, you know, money will come.
Knowledge compounds at the highest rate possible.
Totally.
Yeah.
I mean, it's amazing. And then it's just to have an open mind, broaden out, learn a lot of different things. I mean, perhaps the most important degree I did was social psychology. I did a degree at the LSE. I mean, it was probably like 7 years ago. I did it quite recently. Social psychology. It's about it's about how you learn. It's about how you take away your biases. It's about how you make decisions. All these kind of things. I mean, you are so lucky. You are still so young.
So I'll ask the last question. I think we are going to close it. So maybe just going forward, where do you see the equity markets? If you were to invest $1 today, which geography or segment within this public equity market would you kind of lean towards? And this is outside the fund. Obviously, we understand that the fund is to track the markets. But where do you see some opportunities maybe for the, let's say, occasional investors in the room here?
Okay, if you want to invest in financial markets, you want to be very diversified and very long-term.
Okay.
Now, what will give you better returns than financial markets? Education. Education is the best investment you can make. One investment better than that, spend your money on experiences with family and friends. That is the investment which will give you the most happiness over time. And with that, good luck with everything and all the best. Thank you.
Thank you so much. Thank you.